So I'm sure everybody in this room has more or less bought something online sometime in their lives. Whether it be an airline ticket or maybe a hotel booking or a spa voucher or a buffet deal, more or less everybody probably in the past few years have tried to buy something online. And e-commerce in the Philippines has really changed quite a bit in the last 15 years or so. We have seen waves of changes happening, and FinTech has pretty much been adjusting to the way e-commerce work in the country. Okay, so in the last 15 years, I tried to categorize the way e-commerce has changed. So I broke them down into 3 waves. Back in the early 2000s up to the latter part of 2000, like 2009, there wasn't really much that you could buy here online in the Philippines. The only thing most people would pay online for would be Philippine Airlines or Cebu Pacific. So these were basically just enterprises that were selling. You didn't really see the SMEs or even the MSMEs sell things online. And as you would expect, the things that people would buy would be fairly large ticket items, 10,000 pesos, 20,000 pesos, because these were airlines again and hotel bookings. 2010, around the time of, I would say that was a very pivotal year for e-commerce in the Philippines, because that was primarily the time when the Groupon clones came in. So there was Metro Deal, there was Cash Cash Pinoy, there was Ensogo, and suddenly overnight, people could buy things for 400 pesos, 500 pesos, and these are things that they would be able to use in their daily lives. Everything from eating at the neighborhood restaurant to going to an amusement park. So unlike travel, wherein people would only do it maybe once, twice a year, suddenly there are so many things that people could buy now, and it has greatly lowered the barrier to entry because people felt, even though a lot of people were still not comfortable with buying things online, they realized that, hey, this is just a 1,000 peso voucher. If something goes horribly wrong, what's the worst thing that could happen, right? You just lose that 1,000 pesos. So it wasn't really that big of a deal anymore, and it greatly reduced that barrier to entry to just trying things out online. 2 years passed, 3 years passed, and I guess people started to feel what they call the deal fatigue. And people started getting tired of seeing the same restaurant, same spa being offered again and again. So that industry started to dwindle. And that's when we started seeing the rise of the third wave. And this is what I refer to now as the marketplaces or the market platforms. This was the time that Zalora, the Rocket Internet Group basically came into the Philippines. Zalora and Lazada started really growing the local market. And even though Lazada initially started more like an Amazon wherein they were the giant retailer, they pretty much quickly transitioned into more of a general marketplace where people can go, can sign up with them and start selling their wares through Lazada, through the Lazada platform. Fast forward a couple years later, and you started seeing the likes of Shopee, which is probably their largest competitor right now. Shopee is owned by the SEA group of Garina, recently listed in the New York Stock Exchange, and similar. They're doing something similar. You basically sign up as a business. You go to Shopee, you open your online store, you start selling things, and they pretty much take care of everything else. So the marketplaces have really done quite a bit to move the e-commerce agenda even further, and what made things. I would say what really pushed things a little bit more is the fact that these marketplaces were largely subsidizing the actual cost of doing e-commerce online. So instead of the sellers having to pay for payment processing, for shipping, Lazada and Shopee has pretty much been absorbing all the costs in an effort to really push the market. So it's good for the consumer. The sellers are also happy. And the platforms, the marketplaces right now are pretty much absorbing the brunt of all the costs. Somewhere down the line, they have to turn a profit, and I'm sure the business model would change a little bit. But for now, people are enjoying being able to go to Shopee and buy a 200 peso item from the official SM store. So that's really crazy. From the large ticket items, now you can buy something as low as 200 pesos online, and it gets delivered right to your home. We actually did a research back in like 2011 or 2012 with Metro Deal, and we were looking at the different ticket basket sizes. And back in 2010, the average e-commerce purchase was roughly around 1,000 to 1,200 pesos. It was around that range. So you can see from the big, 10,000, 20,000 peso, it went down to about 1,000 pesos, and now you can go as low as 200 pesos and you can buy something online. A lot of people are also selling indirectly through Facebook and Instagram. They have converted Instagram into a store somehow. So you have all these personal sellers. Most of them are not registered businesses. They just go online and start selling fashion items, which is the most popular item on sale. And they either do direct bank payments or through any of the mobile channels or through cash on delivery or what have you. And in the case of OLX, I don't know how popular face-to-face meetup is still nowadays, but as I understand it, it was quite popular a year or two ago. And that is pretty much where OLX really makes their bread and butter, allowing a seller and a buyer to meet each other online, and then they physically consummate the transaction in the payment. So as I mentioned, e-payment has pretty much evolved along with this trend. So in the earlier days, when it was purely just the airlines, the only payment option was really just credit cards. 2010 came, and the daily deal sites came in, and we started seeing alternative forms of payment. And and Dragonpay actually came in during this time. So back in 2010, that's when we started, because we saw the opportunity of opening up e-commerce to everybody in the country. So not just the single credit card penetration that we're talking about, but everybody from all walks of life, people with online banking accounts to people who just want to walk up to a Cebuana store or an LBC or an SM Payment Center and pay over the counter. So we made all the payment options available. We work with pretty much everybody in the deal site industry, Metro Deal, Cash Peninsula, Go, what have you, a Deal Grocer, and there's like, I don't know, 2 or 3 dozen of them. Of course, they're all non-existent now, except for a couple of the bigger ones. So we grew with the industry. Alternative payments became quite popular. And now that we've transitioned further to marketplaces and all these platforms, we're now seeing yet another form of alternative payment getting very popular, and that's cash on delivery. And I guess this is primarily because Filipinos still have a general distrust of the seller. And I guess you can't really blame them, because honestly, there's a lot of Facebook and Instagram sellers which are really fraudulent, and they're just out there to scam people. So people are very hesitant in just sending their money and waiting for the product to arrive, because in many cases, the product does not arrive. So to bring in the next mass of people to go online and to buy things online, Lazada was really the main e-commerce merchant that pushed the envelope by introducing cash on delivery. And today, in the Philippine e-commerce payment industry, cash on delivery easily accounts for about 85% of volume. So that gives you an idea of how big the cash on delivery is versus credit cards. Credit cards, I would say, is probably only about 10% or even less of the big from the payment portfolio of the really big merchants. And cash on delivery has its good things. It has its plus sides and its downsides as well. In the earlier days of COD, when this started happening back 3, 4, 5 years ago, failure rate was as high as about 40%. The merchant would ship the product, courier guy gives it over to the intended buyer. Buyer refuses to accept it, or it's just not there, or it's a prank call for whatever reason. About 40% of the deliveries were failing. Over a period of time, of course, the COD guys and the merchants have started educating the user, making follow-ups, making sure that the person is ready to accept it when they deliver. Now I hear it's somewhere around 10% or maybe a little less. Still a bit high, but given that is 85% or even more of the market, there's really no way around it. And of course, there's still probably the meetups here and there. So as you can see, the transition of payments have gone from the privileged few who have credit cards to more people who are maybe a little bit more in the middle market, to those who are a little bit more educated in e-commerce, who are willing to pay through online banking or through by prepaying at the neighborhood convenience store. And now what we're seeing is it's really the masses now, which is still cash heavy, and they are using predominantly cash on delivery. And I guess the courier companies are doing very well in this respect. But of course, if you talk to them behind the scenes, there's also a lot of horror stories of what actually happens to the money, or along the way. So so I mentioned we started back in 2010 when the deal craze started coming in. So over the period of time, in the last 7.5 years or so, we have completed over 18 million transactions, processed 11.5 billion pesos, and we've seen about 11 million unique users go through our system. And I mentioned that the average basket size today has actually already slightly increased. From last year, it was about 1,000 pesos, 1,500 pesos. Nowadays, people are paying about 2,000, 2,100 pesos. So people are more and more getting used to it. Now I mentioned earlier that we did this study with MetroDeal back in the earlier days, and we were trying to figure out whether do people with credit cards actually pay more than people who pay through alternative payments, based on the presumption that people with credit cards have are in a higher income bracket and therefore might have more disposable income. And strangely enough, based on our data, we found out at the time that the average basket size of people buying deals at MetroDeal using a credit card was somewhere about 1,000 pesos. And those who were paying using Dragonpay's alternative payment, over the same period of time, they were actually buying somewhere around 1,100 to 1,200 pesos. So it actually showed that people with cash, or at least people who are not paying through credit card, are not necessarily a less attractive market because they're actually paying more. Now, of course, there would probably be a lot of explanation behind it, and I'm sure some of the people who do pay through alternative payments probably have credit cards. They just don't want to use it online for security reasons or privacy reasons. But the main takeaway point there from our study was that for any merchant to do well, they really just have to accept all forms of payment, and that one market is not really less than the other market. And the only way for you to grow is to really accept all forms of payment. So alternative payments also seem to have a connotation that it's a niche market, and that if you're a mainstream merchant, you probably don't want to touch alternative payments. You stick with the big brands, the schemes, the Visa and MasterCard. But over a period of time, the merchants that we deal with nowadays are mainstream, as you would imagine. From the online store of Smart, we work with the banks, the major real estate companies, even the multinationals like Facebook and Spotify. They have come to the conclusion that you really cannot penetrate the Philippine market if you stick with just credit cards. So we serve the requirements of Facebook, Booking.com, Agoda, several other international sites as well. This is a picture of the distribution of alternative payments that we see. This data was taken from November to December of 2017. And it has really changed a lot over the last 7.5 years that we've been working. So like if I was doing this presentation 3-4 years ago, I would have told you that our largest form of payment category was actually over the counter through the banks. It means most people who were buying things were actually physically going to the bank and paying over the counter to the cashier, to the teller. But these figures from last year has actually quite surprised me as well, because now we see that over the counter through the banks is now one of the smallest segment that we have. And the biggest growth actually in the past 2-3 years has been online banking, which is quite a surprise for us. So we're now seeing a lot of people use their online banking facility to do transactions, online payments, whereas 5 years ago, people only use online banking for one purpose, basically, which is balance inquiry. So people are getting more comfortable with buying things online, and the online banking part, which used to be the smallest segment of our payment portfolio, is now the second largest. And over-the-counter non-banking is still the most popular. So we're talking about 7-Eleven, LBC. It's understandable simply because I guess they have longer operating hours compared to the banks. They're more generally available even in suburban areas. So not surprising. And these figures I'm showing you, I had to specify that it does not include government transactions, because we do process government transactions like for the NBI, the PRC, and as you would expect, people who would be applying for an NBI license would most likely be paying through over-the-counter channels. So if I include those transactions, it greatly skews the distribution. So I had to take out the government transaction, and what you're seeing here is more or less based on the mix of general e-commerce here, general e-commerce merchants here in the Philippines. So the 10% or so wallet would include GCash, Dragonpay credits, Coins Wallet, PayPal, and other alternative forms of e-wallet. So still, majority is still non-cash. And of course, this does not include the cash on delivery, which is the 85 to 90% 900-pound gorilla in the room. So that's basically it. So basically, Dragonpay's mission, our mission and our purpose for being here is really to bring e-commerce to everybody. We want to make e-commerce as available to as everybody as possible, and that's just why our tagline has been more ways to pay. So as we are talking here about financial inclusion, we're bringing people who are unbanked to go into the financial market. Our mission is to bring those same people to go online, buy things online, pay for services online, whether it be government services or whether it be for personal use. So thank you.